Starting. Boom! 3, 2, 1, hit it! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning, everybody. My name is Wayne McDonald. I'm a currency trader. Good morning, Pip Pirates. Arr, arr. That's some good coffee. Yeah, I'm on day 2 of my keto diet. Holy smokes. That's 20% of my daily fat intake right there, that coffee. I won't eat till 1 probably. So anyways, hey, good morning, everybody. Today is a trading day. That's a good day, if you ask me. Right off the bat, new traders, hey, is it risk on or risk off? Well, look at how a typical week works. We started low with risk on, then we skyrocketed high with risk on, then we hit profit taking. So those guys got back out. So it's been down for a day, day and a half. And what do you think? Well, now you have to make a decision, new trader. Are those bulls coming back next week or not? That's what it is. Meta says better to eat bacon. I love bacon. Every time I do pulled pork on my egg or something like that, or anytime I make fabulous pork, I always send a picture to my buddy in Dubai because you get good pork, and he's and he's Dutch, so I'm like, hey, check this out. So when you're in Dubai, you always get like beef bacon burgers, cheeseburgers. So anyways, so happy days. Yeah, so anyways, yeah, so if you think, here's what it comes down to, guys. If you think next week's going to be bullish, then there you go. You should start setting that up now. That's what it is. And if you think it's all over and everything was overhyped and all that kind of stuff, then yeah, you should have been shorting off the top. I mean, it's one or the other. Either a bull or a bear. So so today is not necessarily is it risk on or risk off. Are you risk on? And what do you think will happen by the end of today or tomorrow or Monday? Now, I declared yesterday what I think was going to happen by Monday. And I think it went something like down to sideways, and then maybe by Friday, maybe by Monday, we'll be heading back up. So that's that. So patience and discipline. Cool. So anyways, good to see you. You guys are looking good, even through my my nasty old glasses. The ECB is talking right now. That could be interesting. Jay Powell speaking over in Europe with the central bankers, so that's kind of interesting. England's economy sucks. Okay, great. That shouldn't be too much of a shocker for people, right? Cases maybe are getting better as far as mainland Europe and COVID, but the United States is still a disaster. But wait, there might be a cure or at least a vaccine, and then there's another company that might have a vaccine, and now maybe a third company that might have a vaccine, and you're like, so it's good, it's bad, it's ugly, it's up, it's down, it's sideways. You better know what you want. If you haven't made a decision, then you're probably in freak out mode. Well, that's just not very professional of you. Boy, look at, I can't get them clean. So yeah, so that's what it is, new trader. So I hope you find your bias. It's not whether today is risk on or risk off. It's whether you're setting up risk on or risk off trades. Okay. And then of course, whether you get execution, right? All right, so cool. So, like I said, my name is Wayne McDonald. I'm a currency trader. I like doing this. It's very fabulous. I've done a few other things in my life. This one I really like the most. Also, what I like about Forex is once you understand macro, in my humble opinion, you then start to learn micro. And of course, those terms mean different things in different applications. But at the end of the day, we're even more than Forex traders. We're simply traders and investors. And so ultimately, I don't think you really care whether you're trading Swiss franc or gold or Bitcoin or oil or a stock indices or what. At the end of the day, I think you just like being a trader and investor, and so do I. It's a pretty neat gig, right? So you might have read the EIA stuff recently. You might have read the OPEC stuff recently, right? Right? And you know in 2 weeks there's an OPEC meeting. And so they're already setting out their wink, wink, nudge, nudges. So I'm sure you're on all of that. So that's a cool thing, right? We're always thinking ahead. And I think that's a very interesting intellectual challenge. And then, of course, every day is a little bit exciting as far as entering and exit trades. It never is perfectly easy. It's always interesting. So I think that's a blessing. What's the latest about the ECB now? They're talking right now. Klaus Adam is speaking. So they're going to do some discussion about macroeconomics and negative interest rates and quantitative easing and all that kind of stuff. So that's what they're discussing right now on my other monitor. So cool. So let's get on with it. Ask questions, get involved. Thank you for being a subscriber. Thank you for the likes. Thank you for the comments. Thank you for your professionalism. Honestly, that's one of the things I really like, that we can come together and have fun every day, but we're also talking about pretty serious things, whether it's high-level macro economics, or maybe it's psychological things, maybe it's history lessons about finance. I enjoy my time with you, and you bring, not just sort of joy, but a professionalism, and I appreciate that. I really like what we do, and I think we make the world at least a little bit better of a place to be in, especially if you're a trader. So that's really cool. So I appreciate that, and you're part of that. So good morning. If you need a broker, tradersway.com. They execute your trades. They execute your trades quickly. They pay you proper swaps. They don't pinch your pennies on your swaps and stuff like that. Spreads are competitive if you rather have an ECN account. Even right now, the ECN fees, last I looked, were 50% discounted because of COVID. So, very cool, right? Remember, they're trying to entice you to their website through education. And then they're just asking, once you open a demo account, that maybe they can earn your loyalty and respect. Now, think about that business mindset. Is that the type of mindset you want in an execution partner for your successful Forex trading business? Probably. I would suggest so. And then one last thing. If you're in my swing trading group, I am moving the meeting to 2 p.m. Eastern Time. We are moving it to 2 p.m. Eastern Time. Okay? 2 p.m. 2 p.m. Eastern Time. Yeah. So a couple hours earlier. Okay. Okay, 2 p.m. I'll see you guys there. We will talk about next week. We will talk about next month, in fact. Okay. And then one other thing. The book club is coming along. And like I said, I don't even like calling it a book club because it's not nearly as cool of a concept of what's being built. But what topics would you like covered in that group if you were part of that group? Trader psychology, real estate, options, bonds, Forex, stock trading, cryptocurrencies. What do you think? Joseph, well, it's sort of part of FX Bootcamp. You sign up for the video courses, then it invites you. I think it's $99 to join. Right? Yeah, I'll try to do it again, Meta, but I've addressed it before, and I drew it out and stuff in a previous video. I don't know if I can do much better, but we can try. I can try to address it again. And I guess what I need to do is what you need, or what I should do is try to put together a like a video that, you know. But I've done it before, and I'll try to do it again. Yeah, Elmer. Thank you, Golu. Golu's concerned about my success. Thank you. Okay, so let's get on with this. So a couple of things. I did mention OPEC. There's likely to be... look at Excess. How about an FX Bootcamp flash sale? It's 78.6% off right now. That is a flash sale. Okay. Trading psychology plays a huge impact in trading. Yeah, I'm very interested in that. Like I know there's like Trading in the Zone and a few other ones that seem interesting that we could look into. So I'll have to do research, but I think one of the things we'll do is we'll do surveys and votes and all that kind of stuff. I think it'll be actually quite fun. Yeah, no, that's all right, XX. Hey, man, I teach my kids, like, it never hurts to ask, so always ask. You read it right? Yeah. It's a good one, right? So I thought we should have a few meetings about it. So, like, again, I don't want to start a book club, and I don't want to have a bookstore. I want to have us do some team reading and do some deep dive intellectual discussions about it. I think that's the better thing. All right, so anyways, ECB's talking here. OPEC is talking about cutting demand, cutting supply, or actually extending their supply cuts. EIA has announced that they believe there will be a decline in demand in the early part of 2021, despite the potential for vaccine. They think demand won't come back till the end of next year. So that's going on as well. Yeah. Yeah, and by the way, to Golu, if you said you're in my program, okay, great. Make sure you interact with the other traders, because you'll see that we have quite a support group. This is definitely a team endeavor. So get involved. Get involved. There's a lot of smart people. Very smart people. Okay, so let's move on. What's going on right now? A little bit of a dipsy-do, all that kind of stuff. Could be related to a lot of different things. We're in between sort of the news cycle, if you will. So like I was mentioning, it's nice that we got vaccines or potential vaccines that could be released at some time in the near future to some people, but we realize it's not to everyone, and I don't know if it'll impact the real economy anytime soon, like in the next 6 months. So people are kind of realizing that, but it is a positive change. But as far as today and tomorrow, people are getting sick very, very, very quickly all over the world. So we're caught in that between the long run and the short run concept. So that's why you kind of need to know what you're trading. Are you trading the long term, or are you trading the short term? Are you day trading it today, or are you setting up positions that might last a year? So that you kind of need to know. All right. And that's why when it came to like the yens last week, I outlined that you should write a contract with yourself and decide, are you getting out at the top, or are you going to hold till the end of the year? Right? Like, you can't make those decisions on the fly. And your decision now is short run versus long run. That's all. So the faster you make those decisions, the better. So we got conflicting news, right? We got a potentially, or it looks like we're going to have some sort of vaccine or various vaccines. So that's good news. But right now, everybody's getting sick. Oil production is going to be cut, but demand is falling. So you're like, it's all in between. So you have to decide, again, short run versus long run. I think today we have CPI on the calendar, right? Right? It's Wednesday, isn't it? It's Wednesday, isn't it? I always have to double check. No, it's Thursday. It's Thursday. So let me double check I got this right. Hang on. Let me double check this. I think we have CPI today. Today's gonna be the day. Gonna kick on down to you today. So here we are now. Jobless claims, of course. Yeah, CPI. All right, so that'll be interesting. Okay. Of course, we're trying to see, if we can get inflation. I don't think that's the real answer. Look at that. Just checking out what they're doing. Keep an eye on these guys. Don't you love economics? I got to this level in my economics, and I didn't like it. It took the love out of it. For like a half a minute, I was thinking about getting a PhD, and one of my professors was the guy that managed the PhD program at Harvard Business School. So like, okay. I thought about it for a minute relatively seriously, but then when I realized that, the analysis that they do, I'll just get rid of them for now. It takes the love and fun out of it. So I'm just like, nah. Right. I don't want to get, I think this, if you study too much, I think you end up getting dumber, not smarter. So I think maybe I found equilibrium. All right. So CPI anyways. I think what I was saying is, I think even though we typically are interested, are we getting to 2% inflation, all that, I think the real underlying story here is, there was a recovery in inflation from a recovery in COVID, but is it dipping back down? So that's that. I think the other thing we should do today is, let me give you some links for your own study. Okay? So that I need you to keep up. Let's see, not this one, not this one. Probably this one. Is this where it is? I'll leave it here for you. I think it's this one. It may not be, but I think it's this one. I want you to do the work. Right? Go through it. Find out what OPEC says 2021 is going to be like. Okay, that's not going to impact today. But on the short run, they do make decisions, and then people react to it, even if it's shouldn't be reactionary. But that's how it ends up being. So what we're interested in is, of course, what's their policy on supply, but then what's their outlook for the near and longer term. And that should help you decide what you want to do with oil. That should help you decide what you want to do with Canadian dollar. That should help you decide what to do with Norwegian crown. And then, and, even things like peso, Mexican peso, there's a few trades you could be doing based on that information. And then you should always contrast that with IEA. Okay. So I'll give you that one. And this is the Strategic Petroleum Reserve for European countries, the anti-OPEC. So OPEC's a cartel, but so is IEA. And then there's EIA. don't you just love it? And here's some data as well. Okay, so I'll put that there. And that's the American oil cartel. I mean, it can't be a one-country cartel. But EIA, essentially, think of it as the group in control of the Strategic Petroleum Reserve. And why is there a Strategic Petroleum Reserve? Well, if we need to go to war, and we happen to be, let's say, going to war in the Middle East, and either supply is disrupted or turned off because they're not on our side, where are we going to get the energy for our tanks and our trucks and our planes? So we have to keep oil and gasoline and other types of reserves for our military, right? But also, if there's a shortage of oil in the global supply, or again, there's another OPEC blockade like we had in the 70s, then we can tap into our reserves. So think of it as like 6 months worth of oil and energy tucked away just in case. Well, that's the EIA for America, but IEA is also the European version of EIA. That's why they came up with the clever name IEA instead of EIA. But it's the anti-cartel Strategic Petroleum Reserve. So if the Middle East suddenly is not supplying oil, or the Russians cut off the Europeans from gas, this is really what the Russians provide. But if there's an oil and gas shortage in Europe, then they have this IEA reserve. So the cool thing, though, is they all have really smart people doing really cool research. And they tell you things like how much supply we have and how much demand they think there will be in the future. Okay? And that's what we need, right? Like, how about this one? And I get these emailed to me, so I keep my eye on them. Maybe not like, I'm not reading all this, but you could be, okay? And so look at that, short-term energy outlook, okay? And the research why, okay? EIA estimates that an average of 95.3 million barrels per day of petroleum and liquid fuels was consumed globally in October, blah, 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 blah. Okay, and nat gas and all that kind of stuff. So remember, like when it goes to like, let's say, well, what does this mean? Electricity, coal, renewables, and emissions. Like, Wayne, do I care about this? Well, if we're shutting down factories, do we need electricity? Right? Maybe not. But if you stay home all day and watch Netflix, maybe you are driving up electricity. So probably not as much as a factory, but depends on the movie. Depends on, right? So that's kind of what we're interested in, these micro trends inside of the macro analysis. So at the end of the day, I want you to do this type of work so that we can have an intellectual discussion about, do you think oil will go up? Okay? My oh my WTI. Okay? Okay? And then you could have a conversation about whether you think oil is going to go up or down. And you can say, well, I read not just the OPEC analysis, but the EIA and IEA analysis. And I kind of, here's what I did. I kind of averaged them out. And I think oil demand in 2021 will be such and such number per day. But I think it'll start out lower in the first quarter, but be significantly higher in the last quarter. So I'm not, so it's not just an average, but a sloped mean, blah, 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 blah. So an increase in demand. And then because of what OPEC said, and, I expect such and such supply, and you put that together, and I think oil will go up or down or whatever. Okay? Well, there's an OPEC meeting. I guess, why don't we pull that up too? Let me pull that up. La, 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 la. Let's go back to OPEC. Where's their meeting? By the way, you might just be able to go there. Daily basket price, OPEC opening round. That was older. Major upcoming events, maybe. There it is. November 30th. So just a couple of weeks later, from now. Okay. Cool, right? Sorry to tell you that there's a little bit of work. I know you want to just have fun. That's cool. Okay. How many people here have explored a topic that I gave you, excuse me, a couple of weeks ago about time of day, in particular, from 7 o'clock in the morning. The 7 a.m. time. Between 7 and 8:30, that period. Has anyone explored that? Yeah, it's a trading day, right? I was up, I watched the London Open last night, and I haven't really slept since. It's weird, huh? So I'm a bit tired. Yeah, time of day is so important. Okay. It has to do with, really, I guess it would come down to partially your style of trading. But like, it's particularly important with oil and gold trading. Okay. So we'll have to find it. You'll have to ask Daniel, because he takes notes on everything, when we talked about it. It might have been, what, a month ago? Okay. Eagle Eye says, can we see one more low? Not a great phrase. Yes, it can. Will it is a different. And then, of course, we don't know. So it's more like, what does the chart tell you? Well, if we breach lower than this on WTI, then that wouldn't be favorable for up. How about that? Okay. Mahai, really? Boy, maybe it was 3 months ago. Honestly, I'm not very good with such things. But it comes down to sort of, I think there's some historical norms, like, for example, gold and oil markets used to open up in or around that period, that time of day. It's when trading markets would open, or you would front run it in European markets to catch the New York one, or that kind of stuff. But this 7 to 8 p.m. was very key. In fact, one of the things I said back in that lesson was that if you entered your trade between 7 and 8 in the morning, typically by 10 a.m., you'll be done for the day. Maybe not all the market, sometimes with all the market, but I would say, I say like at least 2/3 of the average daily range you would probably catch in that little bit of a period. Nobody really remembers that? Maybe, you know what, maybe I did that in the swing trading group. I thought I did it here. But it has to do with sort of market open. Maybe it was my day trading course. Honestly, I'm sorry, I can't remember. Can't remember. But time of day is really, really important. Jean-Guy says that you do that for oil and gold. So you do, right? So you do remember, Johnny? I hope I'm not crazy. Where are you talking about it? Oh, really? So, okay, it might have been a year. Okay, it might have been a year ago. I'm so sorry. Yeah, Sophie never forgets anything. Hey, Sophie, did we fix that thing? The thing we were emailing about, like, is that fixed? Like, it was a bit confusing. There's a level of complexity beyond beyond my gray matter, I think. Look at that. Ash says it was on May 11th. How funny. Thank you, Ash. That was a good day. I'll never forget that day. All right. Yeah, I think there was an unusual level of complexity. Yeah, I'm sorry. All right, cool. Let's focus on this then. This idea. So there's 7, right? So that says on here on 14. Okay. Let's do another one. Where's the next 14? Right here. And let's just do one more because I think we can fit one on there. Okay. All right. So what I'm suggesting is, you don't know, this isn't telling you to be a bull or a bear. It doesn't tell you to buy or sell. Sky Killer says, Sky Killer made 1,000 pips and took profit after the election. Was it the right play, Wayne? It was the right play if that was the plan. And I asked everyone to write down their plan on paper, like a contract with yourself, and make the decision before the election. Okay? So if that's what you did, that's the right thing. But ultimately, we don't know the long game here. You can argue that it's right or wrong. I think if you make 1,000 pips, you're fine, right? And you bag that, you bag that. In particular, if you're trying to hit like monthly goals and all that kind of stuff. So we won't really know. I'm testing something right now of sort of like patience. And I look back at the election going back several years, and there's ebb and flow. And I'm sort of testing not just the short run, which obviously is important, but also the long run. And so we'll see in the future which one is right, but ultimately they're both right. Okay? It's the first time you did that. Oh, cool. Right. That's good, right? Your plan was to ride, because they usually take profit weekly pivots, but this time you did. Yeah, no, but like the standard operating procedure, Sky Killer, is if you're at like a monthly R2 or a monthly M4, yeah, take the money and run. Yeah, that's always the right thing. So here's like Sky Killer. Here's another way of looking at it. If you always behave the same way when you hit obvious hardcore resistance and you take profit, that is the right thing. Does that show patience and discipline? Yes. Okay? Yes. Is it emotional? No. So that is always the right thing. Okay. Okay. Chuma says, economic experience, also trading house. Well, I don't have access to Lira anymore. Lira is dead. Although Euro Lira is moving, it's not tradable right now. Okay. Cool. So let's go back to this, though. It doesn't tell you to be a bull or a bear, but it does tell you, right? This is showing you what I'm saying is the important time to be trading WTI. So does this tell you if we're going to be down here at the end of the day or up here at the end of the day? No. But it tells you you should be at your chart. This is the right time. Okay? If you had traded here, well, if you look at, let's say what happened over the course of a few hours, nothing happened. You traded all day and nothing happened. Okay? Or if you traded here, it went up and it came back down, you're basically at break even, and hours go by and you're up a little bit. Eventually it broke, but you didn't know that at the time, and so on and so forth, right? If you came in a little late, it went down and went back up, and you probably busted out and all that kind of stuff. So when you use time of day properly and you filter everything with a bias, you'll do better. Okay? You'll do better. If you bought here foolishly into monthly resistance, well, nothing happened for quite some time and you probably bailed out. Okay? And if you're a bear, you sold at resistance, or this is really actually a counter trend trade, very obvious counter trend trade. So you would have done well. Not all day, but you had a chance to make money, right? Then the next day, I think a bear would have tried again here. Sure. So on the first day, they made money. On the second day, they didn't. That's why you want your winners to be bigger than your losers, because let's say you made $1 here and lost 50 cents. Okay, whatever. And also you want to stay consistent, because now the next day maybe the bulls bought. That's pretty hard, but they might have on the shorter run or something. But my point is, it doesn't tell you buy or sell, but it tells you when you should be at your chart. And I think, to me, those little tidbits are very helpful to know when I should care and when I should not care. Okay. Now, Mahai says, Wayne, would it be a good plan to short Bitcoin? Well, why don't we look at that? The first thing is, I'm a little wary about such things, but we can look at that. Because, oops, wrong one. I still filter things. Wait, no, I guess I have it on commodities, right? I still filter things with macroeconomics. After all that shifting, here we are. Okay? I still shift everything based on macroeconomics, even Bitcoin. So the way I look at Bitcoin is this way. You could do it like, why don't we do position trading bullish? That's weird. Did I delete my indicator? That's interesting. Does it not work on Bitcoin? Let's try gold. Template, position trading bullish. Okay, that one works. Okay, interesting. Let's try template, swing trading bullish. Yeah, it works. Okay, so let's go back to Biddy. Let's do swing trading bullish. Okay, that works. I might have to update this anyways. All right, so I'm anti-dollar right now. I'm actually pro-American economy, which is anti-dollar. And I think I need to make another set of videos for FX Bootcamp. I'm going to have to prioritize those early next year. Yeah. So to explain some of this, but in general, let's just say I'm only bullish. So I have this question that I'm offered here. Should people be considering selling Bitcoin? I don't have that luxury. Right? Oh, Ghana! I love a Ghana! Hey, welcome, Ghana. Anyways. So I don't have that luxury. I don't have that thought right now. Okay? So I can't think about it. So to the person that said, hey, would it be a good idea to start thinking about shorting Bitcoin? It wouldn't be my first thought. But I can't predict the future. But that doesn't look bearish to me yet. Now you might say, well, Wayne, but yeah, and all those are probably right. But if I were me, okay, I'd be looking at that as support. Claudio says, hey, Wayne, is it too risky to sell Bitcoin? I don't know anything about that. Guys, I don't guess like that. This is bullish, that's that. I'm bearish on the US dollar, and this is bullish. So is it risky to sell in an uptrend? Yeah. Is it risky to sell Bitcoin now because of the all-time high? I don't know anything about the all-time high. Well, how do I know this won't go to $40 million in Bitcoin? It's bullish now. And until it turns bearish, it probably would be risky to sell it. Even if you made money, if you sold it high off a psych level or something, okay, fine, good, right? But it's still too much risk. Even if you're right, it wouldn't be the right thing now. So I'm just looking at it from this point of view. Now, let me change this and see if the position thing is going to work now. Position bias. Okay, so I have to fix this. So let me show you how to do MT4, guys. Swing trading bullish. All right, so I have to fix this. So now I have to go to indicators, and I need to go to biased pivot points. I need to go to monthly, and then I need to save it, close it. There she is, 4-hour Bitcoin. So now I have to go to template, save template, and I want to make it position trading bullish. Position trading bullish. Save it. Do you want to replace it? Yes, I do. And that's that. Now I want to go to indicators, bias pivot, still monthly, but now make it bearish mode. Bearish. Okay. Oh, you know what else I want to do? I probably should have done it the other one too. I want this to be true. True. Because that gives me 2 targets, right? Shoot, so I'm going to have to do the other one again. So anyways, templates, save template, position trading bearish. Replace the old one, yes. Now I need to put it bullish again, and because I forgot the other target. So bullish mode, monthly, with midpoints. Okay, change. So it's got my targets. Great. Got to save it again. Template, save template. Position trading bullish mode. Replace the old one we just made a minute ago. Yes, and we're done. So some of you guys might be saying, well, Wayne, this is the projected high. Should I sell? That's the thought process that people are having here. Wayne, that is projected high. $1,615.58. We knew that weeks ago. Okay, that's true. And if market participants follow the rules of engagement, then they should take profit here. That is also true. So now the question is, Wayne, Is it a good idea to sell it or is it too risky? I wouldn't sell it, but that's me. A blue boy says, wait, why don't you make a bearish and bullish template? I did. See? Position trading, bullish. Position trading, bearish. So I did. That's what I did. Yep. Okay. So, so that's that. So should you sell it? I don't really trade that way, but you could. But I would say taking profit makes more sense than selling. But you could. It would be a counter trend trade. And maybe it was just the way I was raised, right? My wolves, the way that the wolves raised me is to be risk averse. And since the early days, I've been very anti counter trend trading. Okay. Now, Rookie says, well, there'll be stops there. Okay, that's what a counter trend is. You're hunting stops. Okay. So you could, and you would do it on a small time frame, of course, 15 minutes or less. But I'm not even, I would rather wait, if I were me, on Bitcoin to wait for the bearish trend to present itself. I'd rather see a move like that and get short here, kind of thing. So I understand that's take profit, but it's, and by the way, let's go through the psychological aspect here. I sat at a Pete's Coffee in San Mateo, California, and I said to myself, I'm worried that traders are going to think this is a sell zone. Because it's just another combination of lines. And they look at lines and they say, the lines are telling me something. And I have to be clear that they're not telling you to sell in this case. So I thought about it, and I called it the pivot profit zone. Because remember, when I wrote the book and even had the pivot points, the pivot point indicator created, it didn't exist anywhere. There was no books. There was no indicators. There was a guy pitching courses on pivot points, but he never gave you the pivot points. You had to pay a monthly fee and he would tell you where the pivots were. So like, there were no indicators. No joke. There were no indicators. So I made the indicators and stuff, and then I traded pivots for years and years and years, and I created these rules of engagement for my own life, my life experience. And maybe it's the wrong experience, but it was my experience. And so I said, well, this is where bulls exit, but it's not where bears sell. You could, of course, but in my experience, on the long run, it potentially doesn't pay off well. That's all. So in this case, I would be a bull exiting, and I would wait for a new entry. And it's complicated when you hit your target early. So again, if you've gone through the swing trading course, you know what that means. Okay, you know what it means. It's obvious. So now the question is, we're only halfway through the month, and we've peaked on a lot of our potential. And we don't know if reversals will come out of it or not. So we have to ask ourselves, well, what would create a reversal? And we have to then assume that risk. And if you feel like there is reasonable potential for, let's say, market conditions in the US to crash again, not crash, but let's say deteriorate again. So spikes in COVID-19, no longer a stimulus package. If those two things happen, then maybe our long-term dollar weakness is cut short, at least for the next few months, right? What else is going on? Back in March, back in March, I said that I missed the stock market bottom when I was telling you guys to get ready to buy things. I already have a bunch of stocks, so I should have, and I almost, and I didn't, but I was late and I missed it. I wasn't planning properly for the stock market. But I did do some stuff with illiquid assets, which required leverage, we'll call it. So I started borrowing money back in March for a couple of illiquid assets. One I'm still negotiating, okay? But the thing is, when I started locking up that money, the 10-year T-note, I think, was at 0.47, or was it I think it was less than a half. It was a 0.37, okay? But anyways, I believe the 10-year was approximately, I'm hedging because I think it might have been lower than that. But let's say it was definitely less than, so back in March, let me write this better. Back in Mar, the 10-year T-note, the 10-year note, in which things like your mortgage, your credit cards are all based on this interest rate. Okay, it was 0.47. So I'm like, well, I could buy the stock market, but I already own the stock market. So what else could I do? And I'm like, well, this is ridiculous. Right? Ridiculously cheap money. So I'm like, well, if I were a hedge fund, what you do is you borrow cheap money and then you buy an illiquid asset. Why do you buy an illiquid asset? Does anyone know? It's actually a form of alpha. Because it most likely will appreciate. So you have to buy it with cheap money, plus you get the benefits of leverage and all that kind of stuff. And then, of course, most people can't buy illiquid assets. So if you buy at the right time, someone's dumping the asset, but there's no market. So now you get, right, you buy it cheap and you get multiple expansion, is what it's called. So you can buy a company. Like think of it this way. You're a big successful company. You're like Google or something, okay? You're Apple computers. And so the entire stock market crashes, COVID, and all of a sudden, some of your competitors that you actually kind of admire, you're like, actually, they have some tenacity in this company, and they make reasonable products, and I think they got some smart people on their management team. But they get crushed because they're not Apple. They don't have $1 trillion in cash in the bank. So the stock market crashes, the economy crashes for a good year, and they're screwed. The small company is screwed, right? They're like, oh my God, we're a young startup. I mean, okay, we were doing well, but the entire market just collapsed. Access to capital is gone. Like, people are not buying our products or anybody's products, and we're dead in the water. But Apple's got $1 trillion, so they're like, yeah, we're good, we're fine. So now they go and they can buy that company for cheap now because the stock, let's say on the young company, went from $82, or suddenly now it's $14, right? So Apple swoops in and says, we'll buy you for 22, and there's a merger arbitrage play or whatever, but they buy you cheap. Because, buying a company is sort of an illiquid, right? Because it's hard to sell a company. But imagine now it's an apartment building, and the market tanked and people aren't paying rent, but you think it's short term, and the value, because they're not paying rent, the value of the apartment building is now 50 cents on the dollar. Do you buy it for 50 cents on the dollar? And then the bank is desperate to get it off the books, and so you go in and you're like, well, I'll offer you 40 cents on the dollar, right? But whatever. So that's part of it. But then if you can fund the purchase with cheap money, then those are the two components you need for buying a distressed asset that's illiquid. You need to get a source of funding that's cheap, and then you need to buy the asset for cheap, okay? And you get all that, right? So what's the 10-year T-note now in November? My point is, we're talking about inflation today because, did it already come out? Yeah, because CPI came out today, right? And is it 1.7? Is it 1.8? Is it 1.5? Whatever. The thing is, people will tell you interest rates are at an all-time low and maybe we'll go negative and inflation is low and stuff. But interest rates have doubled in the United States this year. What do you think of that? Not the Fed funds rate, but your credit card rate might go up. If you are now to buy an illiquid asset, so now you're going to go out and buy a house, okay? And you used to be able to get, let's say, a 2.5% mortgage, but now it's going to cost you 3.2, right? Because 6 months went by, but 3.2 versus 2.5 over 30 years might cost you another, let's say $87,000 or something, right? And you're like, oh, yeah, you waited 6 months and it cost you $87,000 or whatever, right? But isn't that remarkable? That we went from less than half to almost one? So things are moving. So how do you make the 10-year T-note go up? I mean, interest rates, yield. How do you make the yield go up on a 10-year T-note? How does it work? What is the mechanism? Yeah. Yeah. Well, I thought the Fed was buying them all up. That's interesting, right? They're not buying the 10-year T-note. They're buying something else. Okay, but this will impact us. So, or foreigners, like maybe the Fed's still buying, but foreigners are not locking up their money. So where does the money go? If you dump your bond portfolio, if you dump your 10-year T-notes, your notes and your T-bills, your T-bills and your T-notes. Okay, because you got a 1-year T-bill, you have a 10-year T-note, you have a 30-year Treasury bond, bonds, notes, and such, right? What do you do if you're dumping your bonds? I'm trying to show you the flow of cash. What are people doing with their money? What flows opposite? What has an inverse correlation to the bond market? Yes, price down, rates up, but what are they doing with it? So the price is down because people are selling it. They buy stock. Yeah, they're buying the stock market. Okay. And remember, I said all of this was starting in May. Might have been April. But go back to the Fed meeting. There's a Fed meeting in there. I think it was April maybe. And I'm like, that's it. I'm short the US dollar for the next 5 years. So that answers someone else's question above about the US dollar and my bearishness. So back in April, I said short the US dollar for 5 years is my opinion, unless there's another exogenous shock like COVID-19 just shuts down the global economy again. Well, that has to do, a hurdle rate has to do with like your performance of your fund to beat a benchmark so you get paid. It's like a high watermark is like that. Like for example, you promise your investors a 7% return, right? They get to keep the first 7% of all your profits, and then from there you split it 80-20. That'd be like an example of a hurdle rate. And that's not typical of an absolute return fund like a Forex fund. But like today, I'm studying a real estate fund again. So I spent 6 months of last year studying real estate funds and 6 months of the year before studying real estate funds. And now for Harvard Business School, I'm starting today real estate funds. And having a hurdle rate, having a look back, those types of things are more indicative of a real estate fund. Now, a look back would be like ensuring someone gets their expected return, and making sure they get that. And you can kind of guarantee it. Like you can say, okay, you're investing in my real estate fund. You'll get such and such money. And then at the end of the year, we'll look back and make sure you got your 14% or whatever was agreed upon. And then depending on whether you give that to them or not, usually what you do is say, okay, I'll put that look back clause to make sure, because with real estate, you're collecting income, but you don't know the outcome of the fund until you sell the assets. You have to buy the apartment building, but then dump it before you refi it in 5 years, or refi it and then dump it in 10 years before you have to refi it. So you don't know the end game. You don't know the end result, right? So at the end, you dump it, and then you have to go back to the client and say, okay, we have this look back clause. When we dump the asset, we have to look back and add up all the income you got and all the opportunity cost, and then what we actually sold it for. And we need to look back and say, well, we are guaranteeing you that you'll earn enough to get your 14% return, right? And so here's that money. But then typically what you do, if you're going to do that with a client, which means you're taking away a lot of risk for the client, because you're ensuring they'll get their target return. So then you say, well, after that, I get to keep everything. Or you can split it and say, well, we'll split it 50-50 until you get your 14%, but I get some money too. And then after that, we can split it 80-20 or something like that, right? Like there's different ways to negotiate. But all of that is more indicative of a real estate fund than what we're doing here, which is an absolute Forex fund, absolute return Forex fund. And that's your standard 2 and 20 model typically, okay? Or 1 and 25 or 1 and 30, whatever you negotiate, really. Cool. So I see this going up right now, and I see these are targets that we set weeks ago, but would I sell that? No. Could you? Oh yeah, you could. And just realize you would be at first hunting stops. This part is hunting stops. This would be a head and shoulders. And then this would be a bearish trend. Okay? Stop hunting, head and shoulders, new trend. But that's not me. Why am I on YouTube? I'm a narcissist. So I've been told. Cool. All right. So there's your biddy. So do what you want to do with that. But I'd be careful. Okay. So now look at this. We've now finished this hour. Isn't that interesting? So the way you would play this if you were a bull is, you'd love to buy this. Let's kill this. You'd love to buy the dip and drop your stop. Okay. And see if you can roll. Because notice, this is from the New York Open to the New York close. New York Open to New York close. Okay, New York Open to New York close. So when you get it right, it's right most of the day, most of the time. So think of it as, what's the trade of the day? Well, it's day trading, isn't it? Okay. No, that one was interesting though, NTM. No, I I got kicked out of that at break even, and I made 1,000% return on investment with no pips. But that was, again, I was trying to show people patience, discipline, planning, and of course, kind of the math behind Forex trading, or at least the way it used to be. And so it's difficult to be a yield hog now. It's difficult to be a carry trader now. But I used that as an example, NTM. And that was quite a while ago, but I held it for 10 months. I made 0 pips, and I made 1,000% return on investment. So that's some nice yield. It's gone. That world doesn't exist anymore. But, you know, I think it was a great example of what can be, what could be if you're pushing yourself in that direction. Yeah, well, rookie, I think everything would be. Like, the stock market is good for trading and for investing as well, right? So like I just showed you, here's one thing you could be doing all day. Okay? Okay? So imagine, like I was showing you before, you're in this moment. This is where I say you should get to your charts. Something is going to happen. You should be ready, willing, and able. There's not a lot to go on here to tell you to be a bull or a bear, right? It certainly didn't say you should buy it. But if you were already a bull, and that is the absolute key to everything, then you're going to say, ooh, well, if it hits this double bottom at 41 and turns, not just because it's 41, not just because it's a double bottom, but because you're at the right place at the right time. You say, okay, I'm about to catch this giant wave of money entering the world of WTI, the market open, the New York open. And you're like, okay, this 41 looks special to me and I'm a bull. So it's been down, 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 higher, high, higher, low, higher, high, higher, low, right? Higher, higher. Like at just some point, you're on the clue train or you're not. And you can do price action like I just did. You can do a 5A cross. You can do this one if you're doing it on a 15-minute. Like the point is you're ready, willing, and able at the exact right time. You set it up, you take it, you drop your stop, and you're done. Okay? And I taught you this May 11th, 2020. I believe it's in the day trading course as well. Like, it's just that, that's how you do it, right? That's how you do it. Benjamin says, I had an epiphany yesterday that even after looking at your course and your webinar after 1 year, I still don't know what I'm doing to get an entry. Well, there's a great example right there. You're right here, and you say to yourself, it's going to hit 41 and goes up. Boom, right there. So we'll have to work on that, Benjamin. Are you in the swing trading group? Are you going to meet with us today? Yeah, then we can address that. But to me, it's actually the easier part. Right? So like when you look at this, you're like, I'm going to buy it at 41. 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 Giant bullish engulfing candle. Holy smokes. Or like I said earlier, if you look at it on a 15-minute chart, okay, double bottom, higher high, higher low into the moving averages, gone. Okay? And then, of course, doing this even on a 1-minute chart is also like wonderful, just super wonderful, right? So imagine now you say to yourself, you're here, and you're like, if this comes down to 41 and flips, I'm buying it, okay? It's a thought process. It's not the indicators, it's a thought process. And then you get up, 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 down, down, buy, 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 up, 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 down, down, buy, up, 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 up. At some point, you got to be on the clue train. And if you are ready, willing, and able to buy a bounce on 41, then any one of these is proper. And I like to use moving averages sometimes to confirm. Like, technically on a 1 minute chart, it's kind of funny. I mean, it's funny. There's no market on a 1 minute chart, but technically this is bullish, right? Here's your role reversal, by the way. So now you got your Fibonacci, you got your price action, you got your moving averages, you got the double bottom, higher, high, higher, low, 1, 2, 3 pattern. So whether you do it on, and I have to tell you, it's because you thought it was going to happen here, and then you saw it here and you did it. But my guess is you don't see it coming before it happens, and that's why you double guess on pulling the trigger. So to me, it's more of a planning issue, because there's so many different ways to have just bought it. So it's not a technique per se that's missing here, right? So like another one that I love is like the stochastics, right? So throw down a Stokes. Okay. It's another good one. Okay. So all these little buys. Buy. No, right? Not yet. So second chance. Okay. Try it on a 5 minute is much more likely. So yeah, so you're like, it's going to hit 41, which is support, by the way, psychological level, time of day. And when you were ready to buy it, it was, where's the number? I'm still used to GFT when it's so funny. Anyways, it's like 95% oversold. 40 overbought, but it's giving me price. It's funny, I just don't remember anymore. Anyways, it's 95% oversold and turning. So it's just a lot of things. It's usually, I think, having the plan before you show up, and then you're like, oh, there it is. So like in my book, I talk about the mind's eye, right? It's the mind's eye. There's no like one trigger. Usually if you're ready, willing, and able, there's like 9 triggers. But if you don't see it before it happens, then you won't recognize what's happening in the moment, right? Right? So like Joseph, so like I outlined today, what's the message here? If you're going to trade oil, for example, now you know exactly the time of day you should be at your charts. And if you filter your information as a bull or a bear, it seems that very often you do all right. And you get the trade of the day. Okay. So what we're looking at is not past. What we're looking at is the future. So now tomorrow, be at your chart. And Joseph, you have to decide now, are you a buyer of oil or a seller of oil? Dude, Joseph, I just went over it like literally 1 minute ago. It could be here if you're playing the double bottom. Here is part of the fib roll reversal idea, right? So you didn't quite get that. You got the moving averages, but I don't know if you're playing the 5 minute chart. Okay. So there's just here, 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 here if you're doing the 5/8 cross, which is standard boot camp stuff, going back 20 years. There's price action, So let's do the price action, right? Up, 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 down, down. So that you know this is double bottom. So you know that's a 1, 2, 3. I mean, there's so many entries. Okay. I kind of like these ones, to be honest with you. I like 1, 2, 3s. So many, many, many years ago now, I remember it was like yesterday, but now I realize I was in a different office and everything. But I remember we were working on consistency with one of our long-term FX Bootcamp members, and I had him just do the 1, 2, 3 reversal pattern 100 times. Nothing else. Okay. Pierre says, I downloaded your template. Best thing ever. Cool. Next goal, swing trading group. Right on. Remember, everyone, 2 p.m. now is the swing trading time, swing trading group time. 2 p.m. Eastern time. It's changed. So it's 2 hours earlier now. How do you bail out, or when do you bail out of a day trade? Well, a day trade, okay, is the trade of the day. So again, there's a whole day trading course. It's hours and hours long. But for example, let's not do it this way. Let's do where is it now? Position. Day trading bullish. Okay. Okay. So this is yesterday. Okay, you remember yesterday? Yesterday we were here, okay, and probably this is what, New York open. So I think that's about where we were yesterday. Okay, so we're starting New York, and we've already hit our daily target. In fact, let me update this while we're doing this. Okay, indicators, bias pivots. I need to throw down the conservative target. True. Okay, great. So let's do this. Now I have to save this. Template, save template, day trading bullish, save, replace. Let me quickly do the bearish version. Bearish, template, save template. Day trading bearish, save, replace. Yep. Turn it bullish again. Template, day trading bullish. Okay. All right. So let's go back a day. Okay. We know yesterday, this is our desired entry price, and this is the conservative exit. And we start New York at the conservative target, wherever it was. Okay, these are day trades, so that's about New York open. So we know a couple of things. First of all, if you're a bull and the market opens, this would be like the dumbest place you could possibly buy it. So if you were a bear, you might say, well, I could counter trend this, but okay. But what else did we know yesterday? Okay. 4130 is where you kind of want to get long. So today wasn't perfect. It wasn't like this day. Okay. So it's never going to be perfect. But notice it's price action more than anything. And so if you were a bull, remember, you're just a bull based on your fundamental analysis. So your thought process is, well, maybe we'll get this for the rest of the day. So you drive it up to 43. Hey, $1.50 is pretty good on oil. So now the next bigger question, the more interesting question, and by the way, these are just day trades. There's no swing trades here. These are just day trades. The bigger interesting question is this in our forecast or not? And that's what you should be thinking about now. But if you're a bull, that's pretty easy. That's as easy as it gets. And then you should probably have growing concern about 43. So today you're thinking, buy it around 41. If you can drive to 43, you'll be happy. $2 is good money, man. Right? On one contract, that's $2,000. Okay? But is it going to 50? Well, wouldn't you like to know? And that's why I said you should study IEA, gave you the link. EIA, gave you the link. Oops. And OPEC gave you the link. Okay? You should look at that information and the information their PhDs and quants did based on deep dive analysis of global macroeconomics. And you should be able to say, well, based on what they're thinking, my interpretation of their analysis, we're going to be at 55 by the end of 2021. Okay. Now, we don't know if that's true, okay? Nor do you want to really hold oil. So the best thing with oil is buy it at the right time of day, exit, okay? Buy it at the right time of day, exit, okay? Or in this case, sell it at the right time of day and exit. Buy it at the right time of day and exit. Okay? You want to be out before 5 p.m. Well, how about this? You want to be out at 4:59 p.m. Well, that's supposed to be 9 p.m. Eastern time. That's when you got to get up. Before that. If it's 4:59, you're still in your oil, you're going to get rollover and it's expensive. Okay. So Jim says New York is generally considered the open. That's why I say if the 8 a.m. is the market open. Because remember, they don't trade on pits anymore. I was very lucky to have stood on the floor of the Chicago Board of Trade and see pit trading. It was pretty cool. It doesn't really exist anymore. Oil you can trade around the clock. They used to open and close at certain times. So let's say though we agree that most, let's do it this way. Most traders come back to their desk between 8 and 9 a.m. Mostly because there's news at 8:30 and the stock market opens up at 9:30. So I think most professional traders should be at their desk more like 8 a.m., which means you should be trading at 7 a.m. Why? Because if you use your analysis, both fundamental and technical, properly, then if you just trade based on what I taught you today, then if you get it right, guess what? Their money is the one that makes you money. They're the wave. You're trading their flow. You're front-running professional traders because you're a boss. Oh, but my broker's hunting my stops. That's not boss mode. Boss mode is I show up and I front-run all the professionals and I ride their money. Okay? And what else did I tell you today? That by 10 a.m., typically you'll have at least 2/3 of the average daily range. Maybe 100%. But we'll say at least 2/3 of the average daily range. Okay? Which means if oil goes up $1 a day, you'll get at least 66 cents of it, maybe the full dollar. But you're not in it for a day, you're in it for 2 hours, 2.5 hours. And you're like, give me my money, I'm done. You guys fight it out. Okay? So think of it this way, like, you're out here. Okay? You're out here. You're out here, right? You're out fairly early, or jam your stop. But I highly suggest you exit oil and not roll it over. Okay. If you like this topic, guys, go to FX Bootcamp, sign up. that you'll love the day trading course. Okay? And if you can day trade, you can swing trade. If you can swing trade, you can position trade. You got this. Okay? But you can't show up trying to do the right thing at the wrong time. Nor can you wait for the indicators to tell you what to do, right? You'll never get an entry if you're waiting for the indicators, because by the time the indicators tell you, it's already happened. That's why you need to be there, ready, willing, and able. You know what you want to do. You got a good idea of the price and the time, right? Like, so you're like, okay, I'm bullish. I got a double bottom at the market open off of a psych level, and then boom, you get a big green candle. Take a shot. Now you might say, well, Wayne, it hasn't given me my 9 levels of confirmation, and I can't afford a loss because it's too much money. You need to drop your lot size and just take the damn shot. Right? So like going back to oil here, you're playing your first shot here. Let's delete this. Your first shot here is off the psych level. And your second one is the role reversal. If you don't know how, or, and of course the confirmation in there is this thing, right? There's a couple of things inside that circle. If you don't get those 3 things, you have to go back and do the courses again. That's what's holding you back, right? Maybe you took the course, you went through it, but something didn't click. There's a hammer didn't click, okay? It's not a bad thing. It's just we've identified that, go back. But like if you don't see the double bottom, if you don't have the psych level, if you don't have your bias, now if you say, well, Wayne, it went a little lower, I wanted it more like 31.30 and it came back down in here. Well, then you should have caught that one. Okay. Or you're like, because it's below here, I walked away. That's fine. You made the decision. I care about the decision. So you're like, well, so maybe tomorrow you'll catch it like this and you'll be above tomorrow's zone. Okay, good. That's good too. Like the bad part is not knowing what you want to do. That's the mistake. Okay, losing money, by the way, is not a mistake. Okay, if you placed a trade here and you bought it and then it dropped down here, that's not a mistake. That's a loss. No big deal. It's a small loss. 1 of 1,000, 1 of 10,000, irrelevant. On the long run, irrelevant. So don't be all worried about that and needing 9 levels of confirmation. You were ready to take a double bottom or you weren't. Or you were ready to take a 1, 2, 3, and you knew exactly the time of day you wanted to do it. So you were there, ready, willing, and able, and you took the shot and you're making money. If as a bull, or you took a shot and you tried bearish, okay, that's fine too. But remember though, the sell zone is up here, guys. Okay, the sell zone's up there. So why would you be selling down here at 41? Do you guys get that? I'm set up as a bull. It went a little lower than I like. Okay, that's fine. But the sell zone is way the heck up here at 42. So like, who the heck would sell down here? Right? Watch. This is why I have bias pivots, for example. I'm a bear. Let's switch it. I'm a bear. Okay, day trading bearish. Okay, so I go to New York Open, and you're thinking, what, selling here? Do you see how that's impossible? Maybe this is more helpful. Right? You see how that's impossible? You're like, oh my God, I want to sell, but that's ridiculous. I can't sell it at 41. Okay? Your first shot here is 41.85 as a bear. Now, you can see someone took it already. So now what? Well, you need to be deciding now. Okay, now. This is what you decide now. Are you going to pull the trigger here? And what do you need to see when you pull the trigger? And are you going to be on a 15-minute chart? 5-minute chart? 1-minute chart? Like, what are you doing, bro? What's the plan? You got to know now. What are you going to do? Not sell now. Tell me what would make you sell. Congratulations, Barry. Thank you. You're putting a lot of effort into it. Congratulations. Barry's having the best year ever. So decide now, guys. What would you do if it touched 41.85 and then you got a bearish engulfing candle? Well, you can sell the candle. Oops. You can sell the candle. You can sell a pullback of the candle. You can sell the next one. Okay? But if you haven't made a decision now, it ain't going to work. It just won't work. If it goes a little higher and goes at 42, are you going to sell 42? So think about it now. It goes up. Are you going to do a 5A cross down? Are you going to wait for the 21.55, which would look more like that? And you're like, well, Wayne, that's just like the other pattern you drew, the price action pattern. I know. To get the 21.55 to cross down, you'd have to have bearish price action on price, right? Bearish price action. You'd have to have red candle, red candle, red candle, green candle, sell, red candle, red candle. Well, that's what this is. And that would roll this over. And then if you use a stochastics, that would roll over because the way the stochastics works is it's measuring, right, this candle relative to these candles. So your Stokes would go like this. So now you're trading the Stokes. No, wait, now you're trading price action. No, wait, now you're trading 21.55 cross. No, wait, now you're trading the 5A cross. No, wait, you're trading all of these things. They're all the same. It doesn't even matter. And that's the whole thing. This is the beautiful thing. I don't even care if you use your oscillators, whether you use your moving averages. You're like, Wayne, I hate moving averages and they're all lagging. I'm like, I hear you. Get rid of them. Wayne, I hate oscillators. They're lagging. Good. Get rid of them. So now all you have is what? Leading indicators, price action pivot points. Get rid of pivot points, then 42 is meaningless. Okay, fine. Don't use pivot points. But know what you want to do at the right time of the day. So imagine now all you knew was you are a bull on oil at 7 a.m. New York time. And you use no indicators whatsoever. All you know is fundamentally you're a bull. And you walk into the market right around here and you say, okay, I know I want to be ready, willing, and able early in the day. I want to front run bulls. I think macroeconomics is improving. I think inflation data is going to come out okay. I think we got support by the central bank. I think, and you made a decision. So it comes down, but now notice the exact bottom here, guys. It's exactly 8 a.m. So at exactly 8 a.m., you hit exactly the price you thought, you get the exact pattern you want, it turns green. So if you act fast and you're long here, you put your stop here, that's a scalp. And your worst case scenario now is you're wrong today. And you're done. You walk away. You're like, lost 22 cents. You see what I mean? You're like, bad day. Can you recover from 22 cents loss? Yeah. Or what? You buy it here, drop your stop, and you know by what, 10 o'clock, which is getting pretty close to now, by 10 o'clock in the morning, you plan on exiting. Okay? There you go. And that's your day. That's your 2-hour day. That's how the oil trader do. If you sold, you lost a little bit of money. If you bought it, you made money. But the value, guys, you have no indicators, no nothing, but you knew exactly what you wanted to do and exactly when you wanted to do it. And it's like binary. It either worked or it didn't. But that's how the oil trader do. Well, that's a compliment, Barry, I guess. So if you like what you see, fxbootcamp.com. If you like the templates, metatraders.com. If you like my broker, tradersway.com. If you want to join my swing group, you have to go to fxbootcamp.com, sign up for the videos, and then it will invite you, hey, you can upgrade your account to get access to the live group, which is meeting today. There's lots of resources. On YouTube, there's at least 6,000 videos associated with my work. I was the first Forex trader on YouTube when it was a startup. Google hadn't bought it yet. There was a time when the first 18 pages, if you typed in Forex, the first 18 pages of YouTube, which is hundreds of videos, would be mine. FX Bootcamp, FX Bootcamp, FX Bootcamp, FX Bootcamp. So I've been doing this a long time, so none of this is new. I've taught this exact lesson to people 12, 13, 14 years ago. And they went on to be a success. So it's not made up. It's not hindsight. This has been working for decades. Time to get on board. Stop trying to invent the wheel. I did get 10,000, so we'll see if YouTube will unlock the features, and maybe we'll do something fun with that. So we have to get approval from them. And Google and YouTube are a very, 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 very confusing entity. I've had talks with their support, and it's really odd. So we'll see what happens. But it feels like a giant bureaucracy of either a government or some other form of monopoly. Like one thing says one thing and then the other thing says another thing, and they don't know each other or what's happening. This department doesn't know that department, and oh, you got that message, and just really strange stuff, unfortunately. So we'll see if they can get their act together, because I love YouTube. Like I said, I've known them forever. And Google's made several of my friends millionaires. And I don't mean 2 million, I mean 40, 50, 60 million dollars. So good for them, right? Good for Google, good for YouTube. So hopefully they get their act together and promote. So thank you very much for being on my team. Thank you for being a subscriber. I hope you are showered with karma. I hope young children throw flower petals at your feet, or at least you feel that way as you walk down the street. But you make me feel that way, so thank you. I will see you guys later today or tomorrow. Remember, that's how the oil trader do. Cheers.